Hi, I'm Michelle Koppel. I'm an enrolled agent specializing in the ERC. We've been doing this for at least the last 2 years, filing to get the refunds and gotten over $10 million for our clients in refunds on the ERC. So I'm here to answer your questions. One of the first questions is, what is a recovery startup business and how are they treated differently for qualifying for the employee retention tax credit? Let's just get right into it and go over to what the IRS has to say. So this is Bulletin 2021-49. It is put out by the IRS. Anything in a bulletin is considered law. So when this comes out, we can reference it. You can look this up yourself. So this is about page 6, and it's talking about the recovery startup business, defining the recovery startup business. Recovery startup business is basically, it's a company that went into business after February the 15th, 2020, and its average gross receipts are less than $1 million. So that's the whole qualifier. You don't have to have a partial suspension or a reduction in gross receipts to qualify for third and fourth quarter 2021. Now, you can qualify for other quarters. I'll be getting into that as well. So a recovery startup business has a special limitation. You can only get the ERC up to $50,000 for third and fourth quarter of 2021. So I've been asked, how do you file for that? You have to have paid employees. This is a prerequisite. In order to be able to file for the employee retention tax credit, you have to have employees. This does not mean contractors. So if you have paid contractors who are getting a 1099, that is not the same. That will not qualify you for the ERC. So an employee is someone you've withheld taxes from. You would have filed Form 941. Showing those taxes and paying those Social Security and Medicare taxes and withholding to the IRS. So again, when we file to get the ERC refund, we file the amended Form 941, which is the 941X. And let's take a look at that. So this is the 941X. Anytime, like I said, that there's an X here, it means it's an amended form. This means that you would have had to file an original form. You cannot amend something that has not been originally filed. So all the calculations would be the same except for the limitation, which is, as I said, $50,000 per quarter. Now there is one small difference. Line 31B. Check here if you're eligible for the employee retention credit in the third or fourth quarter of 2021 solely because your business is a recovery startup business. Check. That's the difference. So this is how you file for as a recovery startup business. Now, the other question that I got was, can a recovery startup business qualify for other quarters? Yes, you can. So you can qualify for any other quarter. So let's just take an example. You started your business in third quarter of 2020, and so you started to have wages paid in third quarter of 2020. Now you can qualify by partial suspension for third quarter 2020, fourth quarter 2020, first and second quarter of 2021, just the same way that everyone else qualifies. But then the question comes up, how do we qualify, and can they qualify using the reduction in gross receipts? So again, let's take a look. It's in the same bulletin down on page 33. We have an explanation from the IRS. So here's this section on what do you do, because let's review how you qualify financially if you're not a recovery startup business. So what that would mean is you're using 2019 as your base year. So each quarter you compare that quarter in 2019 to the same quarter in 2020. In 2020, you have to have a 50% drop in gross receipts. In 2021, it needs to be 20% only. So 2019 is always your base year. So first quarter 2019 gets compared to first quarter 2020, looking for a 50% drop. And then it would go the same for each quarter, second quarter 2019 compared to second quarter 2020, and so forth. Now, and then in 2021, you're still using 2019 as the base year, and you're looking for a 20% drop between 2019 and 2021. But a recovery startup business, as you know, did not have a business in 2019. So what are we going to do? So the IRS lays this out here. If you have a significant decline in gross receipts, it essentially says you can use an alternative quarter. So here we have same rule set forth. Continues to apply. For example, the employer that came into existence in the third quarter of 2020 should use that quarter as the base period to see whether it experienced a significant decline in gross receipts. So now you have a base quarter, which is third quarter 2020, and now you're going to compare that to fourth quarter 2020. And if you had a 50%, remember it's 50% for 2020, 50% decline in gross receipts between third and fourth quarter 2020, you qualify by reduction in gross receipts. And then we use the same quarter, third quarter 2020, that is your base period. Compare it to first quarter 2021. Was there now a 20% reduction in gross receipts? Because 2021, we have a different parameter. So a 20% reduction in gross receipts using third quarter 2020 as your base. First quarter 2021, is there a 20% drop in gross receipts? And then in second quarter 2021, comparing it still to third quarter 2020, do I have a 20% drop in gross receipts? If so, then you qualify by the gross receipts reduction, and you don't even have to get into the partial suspension. So that's the simplest way to qualify. And if I qualified in third and fourth quarter, both as recovery startup business and as reduction in gross receipts, I'm going to choose the method that's going to get the biggest refund. So remember, as a recovery startup, you are limited in third and fourth quarter 2021 to only a $50,000. So if you had 10 employees and you got 70% of those, they each made $10,000, that's a $70,000 refund. So I'm not going to choose the recovery startup business if I can qualify in another way and get more money refunded to myself. So just watch that. Anyway, recovery startup business qualifies for all the quarters that they were in business except for that the initial base quarter. You probably have to see if there was a partial suspension. Would be the only way, because you don't have a basis for a gross receipts reduction. So one other point I want to make about the recovery startup business. Now, we have said the recovery startup business is a business that started business after February 15th, 2020. Now, of course, there's always definitions that we don't think about with the IRS. How does the IRS define that you started your business after February 15th, 2020? Well, the IRS is very specific in that you had a product or service for sale at that time. So let's just look at an example. So let's say that you incorporated your business at the end of 2019. Is that your business start date? Well, let's say you incorporated, and now you have a building that you're going to have some sales in, and so you spend time fixing up the building. You do not open your doors until after February the 15th. So you open your doors, and now you have either a service or retail product for sale. That is still a recovery startup business. So don't let this idea of February 15th, 2020 be like this hard and fast date. So just look a little further. You may qualify as a recovery startup business and not even know it. So thank you. This is Michelle Koppel. I'm an enrolled agent specializing in the ERC. If you have any questions, please email me, MichelleKoppelEA @gmail.com. That's MichelleKoppelEA @gmail.com. Thanks so much.